Hello traders, how are you? Vladimir here from Traders Academy Club, and in this video I want to talk about very important subject for successful trading. And it's not about the trading strategy or how to improve entry or some techniques that you should pay attention to on when you enter a trade, the vice versa. I want to cover the underestimated subject, which is called how to prevent, avoid, get rid, filter, you name it, bad setups. Okay? Very, very important, because let's admit it, most traders, when they are into trading, what do they think? What do they believe? If I have a good strategy with higher success rate, I can make endless amount of money, right? In theory, it sounds good, but in reality, doesn't matter the strategy you use, how good it is, because if the market does not gain momentum or does not follow your anticipated direction based on your strategy, it doesn't matter how good the strategy is in period. What does matter is what you do with the real-time market information. In other words, with the real money flow that the market gives. Okay, so I want to talk about that exactly, how to filter these situations. Before I do that, if you are new to our channel, first of all, welcome to our great community. I would like to invite you to subscribe to this channel. Just follow the subscribe button below this video. Please remember to enable the notification so you know when there is a new content available for you. And also, I would like to invite you to join us, our club, the Traders Academy Club. The link could be found below below this video in the description or in the pinned comment inside the comment section. To present the technique I want to talk about, I want to go directly to a trading report from the Traders Academy Club. Okay, so this is the example what you see here of all the reports that our members get. Okay, let's go to the trade we discussed about dollar yen. So before I explain the technique and why I decided to go neutral on this one, I want to explain why. First of all, initially I wanted to look for a bullish opportunities. So I will quickly recap the analysis, and it's very important you always remember that trading separates into two parts: the techniques to analyze the market, so you know your direction you are looking to trade, okay, and then your trading strategies, the techniques to enter and to exit a trade. So based on the first part, the analysis, I found an aggressive setup where I'm in between weekly swings, high and low, and then I got a very clear move to the downside, ending with a massive bullish divergence on these two lows here, here, and here, between low 1 to low 3 and low 2 to low 3 as well. Beautiful bullish divergence on pretty much everywhere on the MACD, moving averages, on the histogram, on the RSI. Looks great. And for the first time, after the false breakout here, fake breakout on the bottom, we start to make some higher highs. Okay, so it starts to look wonderfully good. But before, let's draw the line here. Oops, pardon. It starts to look good here. We are climbing above this falling resistance line. It looks good, really good. So the biggest question for us here, okay, how do we time the entry? So I go to the 4-hour chart and look for my opportunities. What do I have? Bullish momentum. How do I know it's bullish momentum? How do you define a bullish trend? When market is creating higher highs, higher lows. Remember that. We will need it to the second part of the explanation. Okay, so after that, what do I want? Pullbacks, and then looking for setups. So I expect to see further rallies after the correction. I'm looking for the setups. One of the techniques I apply is called the bullish hidden divergence. Okay, and once again, I invite you to join us in Traders Academy Club. You will be exposed and you will learn all these techniques. Okay, and you will see them, how we work with them on every single day in our live sessions. So we got a bullish hidden divergence. You can see that between this low and the pullback low, right? On the histogram, you can see the bullish hidden divergence. Okay, it looks fantastic. It looks good, and basically we understand as long as this area holds, right, the low and the previous zone, as long as it holds, we expect to see rallies. Now remember what I told you before. Remember my previous explanation about the bullish trend definition for the second part. Here's the second part. How do we return to buyers? If the buyers are really in control, okay, and we got in with this bullish hidden divergence. Okay, so what do we want to see next? We want to see the market continues in a bullish direction, meaning the market should keep creating higher highs, higher lows, right? So it has to start, if that's what to happen, it has to start on the lower time frame where we gain these higher highs, higher lows, then pull back and again higher highs, higher lows. So from the lower time frame through the higher time frame, that's how the price should develop. If the price doesn't do that, that's exactly the bad setups I was talking about. So let's stop for a second and I want to talk about the bad setups. What are the bad setups and what exactly should you look to avoid? Okay, but before that, I would really like to ask your help. YouTube algorithm requires that if you find these videos helpful, educational, beneficial, please hit the like button below this video, drop some comment, some feedback in the comment section, and feel free to share this video with anyone you want. This is completely open for the community to present you very important techniques when you apply in your trading. Okay. Also, a request, if you have any specific subject you want me to cover for my next YouTube videos, please let me know in the comment section below. Okay, going back to the trade, now I want to talk about the bad setups. So what could be the bad setup? Bad setups could be, first of all, wrong setup that you apply using a specific strategy or any technique. Okay, in that case, you can improve it only by practice to understand all the rules. And bad setup could be one that started to look good but doesn't develop. This is also bad setup. Now, on this category, can you really know that in advance where the market will make the move and where not? Of course not. Nobody can. And whoever claims he can know in advance what's going to happen, don't believe. Okay? We need the real money flow. We need the real money to work behind the scenes in a real market to buy and to sell in order for that to be represented on the chart afterwards. Very, very important. So it doesn't matter what the indicator say, indicator just indicates us what's possible to happen, unless the real market, buyers and sellers, would not present it by making and creating the momentum, making higher highs, higher lows. That's it. Okay, so we need to follow the facts, and I always say that if you trust the chart to let you in a trade, trust the chart to take you out of the trade. So let's take a look what happens. Okay, this is the place. That's right here. Okay. Now let's talk about it. What's building up here and what is the thing I'm following? So it started to look good. Boom, great move, but then drop down. Great up move again, and again dancing. Look what happens. Remember what I said? If the buyers are real, we should see higher highs, higher lows. Now look what we have. Low, high, low, high. Do we really have any higher highs, higher lows? No, we don't. Let's go to the lower time frame. Do we really have here higher highs, higher lows? No, we just got two. Two not represent any trend, right? So you see that? Now what can we understand in that situation? Okay, so there is no real momentum. The market is failing to gain a real momentum. Okay, it tried once, failed. It tried second time, failed. No third high. Right? And that's exactly the place where you need to ask yourself, okay, what do I do? Most traders, what do? They stick to the original plan and they stop following the market for the real facts, for the real information. Now, do you understand how not logical it is? Think about it. You rely on the chart to enter the position, but you stop relying on the chart to exit the position. You start to what? To believe in emotions, rumors, wishes, expectations. Someone said, someone showed, look at this line, but there is support, but there is a divergence, but there is a Fibonacci, but there are million of reasons, right? Million of reasons to convince yourself why sticking into a trade is the right thing to do, but it's the wrong thing to do. So when that happens, when you find yourself in such situation, the market doesn't develop, And you see clearly no higher highs, higher lows, not even on the lower time frame, not talking even about this time frame. Even lower time frame fails to get the bullish momentum. Bullish momentum is when the buyers manage to complete higher highs, higher lows, more than 2, 3, 4, right? And the lows follow as well. That's where the bullish momentum is. If it fails to do so, if that's all the market does, look what happens. High, sorry, low, low, high, low, high, and then boom, this low is broken. So you don't, all that count is irrelevant, right? So what does it start to be? It starts to be high, again, again mistake, low, high, now it's a new low, right? So it all becomes a bigger waves. The smaller ones are irrelevant because they don't have a sequence. That's it. And that's the thing. When you find this situation, and let's say you attacked here, okay? Whatever the entry is, that doesn't matter right now. And you find yourself here, it doesn't have momentum. Now in this place, you could be in a little profit, in around break even, in a small loss. It doesn't matter. Cut. I always tell my members, don't stay in a party you are not wanted in. You are not invited. And that's kind of the situation. This is a party. A wrong party for you. That you are not invited to here as a buyer. Okay? There are no real buyers. And how do we know that? Because they don't show the buyer's sign. Buyers manage to create higher highs, higher lows. If they fail to do so, they are not in the game. That's it. Step back. What will happen next? Is it going to continue now and, you know, break the trend line and fly, or is it going to down? Who knows? Nobody knows. Okay? That's why you will, once you cut, you would have to stop, reanalyze, and find your opportunities. Prepare the next following plan. But the most important thing, do not, and I repeat, do not stay in bad trades. Bad trades could be the ones that you simply did wrong since the beginning by not following the rules, and in that case, immediately cut, or if it simply doesn't develop the way it's supposed. And in order to know that and to help yourself to cut earlier, you need to have a specific plan and clear understanding what should happen on the market once you are in a trade. Okay? In a bullish momentum, that's what you're supposed to see. And on the lower time frame, that's what you're supposed to see. Or at least 2 waves up, 2 down, and breakout. At least. Okay? And then the higher time frame would really have higher highs for you. Okay? That's it. If it doesn't follow, that's a way of the market to tell you simply something is going on. There are no real buyers. And as a trader, you always have 2 choices. Or ignore it, or listen to that and follow the market facts. Most traders simply ignore. And this is ridiculous. Think about it. Think about it. You really rely on the chart to enter the trade, but you don't rely on the chart to exit the trade. So how does it make sense? Right? So very important thing, and I hope you understand that and you understand the logic of these steps I'm presenting here. Okay? And once again, I really want to invite you to join us in Traders Academy Club. Learn all these techniques. Learn how they happen in terms of the analysis, in terms of the strategies, okay, the techniques to enter trades, and in terms of the management. Okay? What to do when things don't follow. That's it. The market gives you so many times early signs to get out of a wrong position. And I want you to remember, very, very important thing. If after your analysis the market doesn't follow and the price doesn't develop as you want, not the market is wrong, the analysis is wrong. Okay? And the faster you accept it, the faster you will cut a position. And it doesn't matter, small loss, break even, small profit, as long as you don't remain in a place where you're not supposed to be at. That's where your chances to enjoy the next good trade when the market does follow your anticipated plan increase dramatically. Okay? So once again, I hope you understand and you see the logic of these steps, and I hope it helps you to apply that in your trading. Let me know what do you think about all that in the comments, and also again, if you have anything specific you want me to talk about in my next videos, let me know as well on the comment section. Thank you very much for your time watching this video. I'm Vladimir from Traders Academy Club, and I hope to see you with us and to show you how all that happens in real time. Thanks, and see you soon.